Hi and welcome to this fireside chat organized by Tuum and Ross Republic. My name is Adrian. I'm partner at the consultancy Ross Republic, and we have recently teamed up with Tuum to create a new white paper, which is called "It's Time to Build: Making the Right Technology Choices to Enable True Business Transformation in Banking." In the paper, we invite you to discover the most important market shifts happening in banking and fintech, the key technologies driving the industry forward, as well as what to look out for when choosing a core banking solution. The white paper has just been released, so I really recommend you to check it out. You can do that on Tuum's blog, which you find at tuumplatform.com. And the fireside chat today is our third and final episode in which we illustrate how a modern technology vendor evaluation process should be designed, as well as the key factors to consider along with it. You can see our guests already on the screen, so let me quickly introduce them. We're really happy that we're joined by Andres Kitter from LHV UK. How are you doing, Andres?
I'm good, thank you. Pleasure to be in this podcast. Thanks.
Awesome. Yeah, so Andres is the head of LHV UK. LHV is an Estonian financial group offering a full suite of banking services. It's the only provider capable of granting customers to both instant British pound and euro payments directly. It's also the trusted provider and partner for payment service providers for years, servicing a variety of customers ranging from fintech unicorns to established financial institutions. Previously, Andres was working at Skype for over 6 years. His last position was payments and billing partner manager. So Andres, I would be really interested to hear from you firstly, what excited you to enter the banking industry after 6 years at Skype, and then also maybe in your own words again, what LHV is offering.
It's a very good question. I think Skype as a company has provided all of employees really good growth platform, and I was dealing mainly with the payment partners. Skype had 24 payment integrations. We offered 64 different payment methods. And that actually gave me a very good understanding what a good merchant needs from the banking partner, payment service provider. And I ended up just consulting LHV at the beginning. But I got a really good feeling while talking with the LHV founders that this is exciting bank which actually can build the product offering beyond the retail banking, what we did at that time, to also a kind of banking services, a merchant services business. So it was really challenging kind of role what was presented, and that's why I took it. Although Skype, as said, was a magnificent platform for many employees. So
awesome.
That's part of Skype as well.
Yeah, so sounds great. So then let me quickly also introduce Tuomas Toivonen, who's the co-founder and CEO of Holvi. How are you doing, Tuomas?
Very good, thank you.
Awesome. Yeah, so Holvi is the home for freelancers and small businesses, especially a home for their finances. And it offers a business account, MasterCard, invoicing, and bookkeeping tools all in one place. So Holvi simplifies the more time-consuming distractions of financial administration, helping business owners to manage their balances. So again, Tuomas, thanks a lot for joining. Could you also quickly describe your own background and also Holvi's offering quickly in your own words?
No, absolutely. I've been with Holvi since the start, so the past 10 years, and been a very interesting road to building a B2B neobanking pioneer. We were 5 years part of the Spanish banking group BBVA. Now, since the so about 12 months, we've been now a fully team-owned entity after a management buyout. So been very exciting last year for us. And yes, we provide a full set of services for small businesses in Europe, Germany, Finland, main markets, and our customers get a cash flow management service from us, all the payment services they need, and we have a credit offering now in Germany and Finland for freelancers in pilot capacity, rolling out in the first quarter and in larger volumes.
Yeah. Great. And then our third participant is Tuum. It's Rivo Uibo from Tuum. He's the co-founder and chief business officer. Rivo, could you also provide a short introduction to yourself and what Tuum is offering?
Absolutely. And hi, everyone. And absolutely a pleasure to be with you here, like Adrian, Andres, and Tuomas. And as Adrian said, I'm Rivo, like chief business officer and co-founder at Tuum. And if you ask what Tuum is, then Tuum is an API-first next-generation core banking suite. which means that we are the platform of the likes that like the guys at Holvi or like the guys at LHV are basically, let's say, selecting after a certain period of time when they look, let's say, to what kind of accounts to chase, what kind of new business models to launch, and so forth. And yes, absolutely, I have been one of the critical guys to launch this venture, so that when we saw the void on the market, we understood that we have something in our skill set and experience base, what to offer to the market. And here we are, and really looking forward to the discussion today.
Yeah. All right, amazing. So I think let's directly jump into one of our main topics, which is how the evolving technology stack at banks will affect vendor procurement. In a white paper, we call it Building a Foundation for Growth. Just to provide some context, our main message is basically that to generate new growth and transform a business, it now really takes a deliberate strategic decision about which digital business models to line up against. We talked about them in the last episode, for example, platforms or aggregators. It takes a deliberate decision where to play in this new ecosystem of business models, which new technologies then also best support that business model. And also lastly, how to win in this new evolving embedded finance era. So what we have been seeing as well is that the largely the business models underlying at traditional banks have remained largely unchanged as well. So it's very balance sheet heavy, very lending focused, which in the business environment over the last years has been quite challenging. And they have to compete against new business models, which are more origination focused, more focused on value-added services, for example, digital distribution. So yeah, and that's basically how we concluded that digital transformation is most often focused too much on the technology part itself, whereas the underlying business model should be a critical part of that whole evolution as well, which has been overlooked sometimes as well. So when you really do a strategic vendor assessment, it's really important to also look at how these new type of vendors that are just emerging, they provide new access to infrastructure, software, and processes, mostly over a software as a service model, which is easier to integrate, easier to follow best of breed approaches, in contrast to, like, let's say, the more traditional ways of integrations, where you probably just went to a large provider who had an extensive product suite and product catalog at a time where integration was hard, and that is changing more and more. So, for example, today it's way easier because of cloud, microservices, APIs, to choose very specific service providers for specific jobs and tasks that you want to get done in your banking proposition. That's why we basically concluded that it will be more and more important when you assess your strategic vendors to basically map it out based on your technology impact. So how much new technology, or to which degree can they bring new technologies to your bank and fintech, and as well the degree to which they enable business model innovation. For example, do they allow you to expose your services and data to third parties? Do they allow you to build, let's say, a marketplace that combines your own services with third-party services easily? Do they allow you to distribute your services over APIs? All these considerations will probably become more and more important, so that you not only focus on the tech, but also on the business models. So my first question would be, how has strategic vendor sourcing evolved, especially when it comes to integrating smaller players as well? And what should you take into account going forward in this whole new ecosystem? Maybe Rivo, if you want to take that first one from a vendor perspective, and then I would be really interested also to hear from Andres and Tuomas how they see the landscape evolving.
Yes, the landscape for the vendor selection, let's say, this landscape is, let's say, quite colorful, to say so. And but what I can also definitely see over the last 1 or 2 years is that customers selecting their partners and vendors are like smarter and smarter. And this is like something we like also a lot at Tuum. So that quite often now also the customers already know what they are after. So that like in quite many cases, the customers have been building some of the, let's say, part of the stack in-house. So they know like the business inside out. Then they know whether they want to replace it or they want to like acquire a certain set of new features. So that like much more educated, let's say, buyers on the market. I mean, this is only good for the, let's say, ecosystem at large. Then now when we look also the plethora of different vendors out there, so that there are like different key characteristics. There are players who went down the route of great unbundling in the fintech era, so that they do this specific small niche like in a really, really good manner, and they skip all the rest. Then there are like some of those larger infrastructure players who have taken the, let's say, really hard route. These are basically the category of players like Tuum, and you cover really, let's say, the large variety of things. And then I see that there are also like certain aggregators who act as a kind of, let's say, mashup service providers. So who are basically tying different bits and pieces together and trying to offer the constellation of value to the customers. So yeah, the landscape is definitely colorful, but also we definitely see also that buyers are like smarter and smarter. So that we have also had the luck to engage with a number of super smart buyers, and it is only like making us happy to engage like on those interactions.
Yeah. Maybe also from Tuomas, I know that some of your infrastructure has been built in-house. And how do you see now this whole vendor landscape evolving, for example, for very specific tasks, like let's say choosing specific vendors for AML, for underwriting and so on? How has that evolved? Has that become easier to integrate, or if you compare it to like when you started out almost 10 years ago, how would you describe the landscape now?
Well, I mean, of course, the huge change in the landscape has been that there is just so many players out there these days. So that, of course, if I look at it from the perspective of being a buyer, it used to be that there's like one or two options. Now there's like 10 options. So that of course makes it more challenging. But of course, buying has become much easier, a much more pleasant process. If I look at from our perspective, we're a very technical organization. For us, it's often the first discussion is already that, hey, we'd like to see the APIs. We'd like to see our own eyes that, okay, how would we integrate this solution? And if I kind of look back like 5-10 years ago, it was like almost impossible to get to evaluate a vendor's technology before going through like 3, 4, 5 meetings with the sales team of a vendor before you could actually see what you're really buying from a technical perspective. And that has radically changed. So often the technical specifications, the APIs are available on the vendor's website, no NDAs required. So also makes it much easier to evaluate as a technical organization, basically, as there is much more options out there. And of course, it also allows evaluating kind of vendor solutions from a kind of subset perspective that, okay, there might be 20 different APIs, 20 different solutions that a vendor offers, but you can quickly assess that, okay, what parts of that would be potentially relevant for you as a neobank looking to integrate additional solutions. So it's much more fun to be on the buyer side these days.
All right, amazing. I'm sure Andres has his own view on this topic as well.
Yeah, it's a very interesting topic, and I think the main principle is that it's never binary. You always need to have your own engineering team. You always have your own proprietary solutions. And where I'm coming from is the principle that what makes the competition advantage, rather build it by yourself. What is commodity, really find the best player out there and outsource it. And you can outsource actually quite a bit of things. I think LHV journey has overall been very, very positive in a way that we started as a brokerage firm. We applied for the banking license in 2009. Then we did the first assessment, how we proceed, whether we're developing everything in-house or actually go after a vendor. We assessed the vendors out there in 2009. Some of them still offering the services, and were actually part of our second RFI, which we did beginning of last year, but I'll come back to that later. We decided in 2009 to build our own platform, but with the principle that we always look at the other vendors who can provide certain services for us in a properly outsourced manner. Our brokerage service in certain markets are provided by Interactive Brokers or Saxo Bank. Our AML platform has always provided by the different vendors. So we've been very, very flexible. Now, fast forward to 2020, when we decided that our banking services business and our UK branch, what we have at the moment and where we serve our fintech customers, needs to be converted into the UK licensed bank. And then we made another decision and went after RFI and assessed all the vendors out there who can provide us a best solution. Although we already had a banking platform, core banking, accounts, payments, cards, and so on, we still went to assess the options at the market. So there are so many different players out there. And again, if you bring it back to the basic principle, what is specific to me, I will build in-house, but the commodity I will outsource. And we approach the same logic.
Yeah, amazing. I think the whole evolving landscape, as you just mentioned, becomes more and more complex. That's why also we have tried to segment all of the providers and to provide a little bit of more of a better overview of what's happening in the market right now. Because all of you mentioned there are more and more providers. Some of them are more specialized. Others are have a more broader and more extensive product portfolio. And I think there are a lot of new breeds of banking service and software providers that have emerged that now enable banks, fintechs, and in fact, like any brand to launch digital banking business models. So on the surface, many of these players offer the same, like integrating a current account or integrating payment cards. But the nuances and like the delivery models can actually vary quite a lot depending on which vendor you're choosing. I can also see a lot of confusion in the market where, let's say, product managers at banks or fintechs don't even know the exact differences between, let's say, a core banking provider and or providers that brand themselves as banking as a service providers. What exactly the differences are. As well as all the whole new emergence of all of these more specialized providers that are now popping up in the market. So we have basically divided this whole landscape into full stack versus niche solution providers, and then providers that have a license in-house and ones that have not a license, and they usually work then with partner banks outside of the organization. So that's how we basically provided a short overview of these providers. Just to give some examples, full stack providers we're seeing in the market in Germany, for example, with Solaris Bank. They have a quite broad suite of like accounts, payments, lending, and they're also licensed as a bank in Germany. So that's one option to go with different pros and cons, obviously. Then you have niche solution providers. In that category fall the whole PSD2 open banking providers that offer account insights and transactions over the PSD2 rails. Some of them are licensed, others are not. So that's obviously something to consider. And then you have the whole segment of full stack providers, which are usually not licensed. I think that's typically like the co-banking providers like Tuum, which provide the software to run a bank. And usually many of the clients even get their own license then or then also work with a partner bank in the background. So I would be interested also to hear from your side how you see this whole evolution and how you see these segments. Maybe also from Rivo again, I know that Tuum has had a recent rebranding because of the whole modular banking term has been quite, distributed across the whole industry. So that was obviously probably difficult to keep that one going. But how do you see this evolution of core providers and banking as a service providers?
Yep, and this one also, let's say, partly maybe goes back to my previous answer that the landscape is colorful, so that there are like tons and tons of players. But yes, what concerns also the rebranding, so that who is not aware, then until end of September last year, we were carrying the brand name of Modular Bank. But as modular banking was becoming a generic term, and we are not the license holder, so we had to basically initiate the mission and find a new brand identity. And that was when Tuum emerged. And Tuum has such a cool meaning in Estonian, which means core, and trying to describe also the essence of what we do. But from the vendor perspective, let's say, look this landscape in a very pragmatic terms, that the ones who are offering their service together with the license, and they are really in this kind of a regulatory compliance banking business. Then there are players like Tuum or Thought Machine or Mambu, who are basically the generic core banking system providers without the license, and we belong into the category of technology players. And already there is a huge difference, so that in one case you already subscribe to a service where the license comes along, and in other case you need to acquire the license on your own, and then you can operate the tech stack. So that each of the business model has its own pros and cons. So that maybe it's also like a good time to give a word to Andres and Tuomas, so that how do they see this kind of diversification on the landscape? And
yeah, I have a very specific question to Tuomas already, which would be, if you could start Holvi again, would you still choose to get your own license and then just use the specific technology vendors to build out your stack, or would you just go for a banking as a service provider, which are licensed, which would then also provide you with the license, and you just focus on building, let's say, more the front end part of your offering, which we have seen, for example, in Europe and in Germany, like many of these new fintechs have chosen not to get a license and just start out with that. What's your view on that basic decision that most of them have to make?
Well, I mean, of course, if I look at from our perspective, when we started out, which was like 10 years ago, the options of not getting a license yourself didn't exist. The technology solutions out there were really classic core banking vendors. As a 10-person startup, you wouldn't even have been, from a resources or from a process point of view, you wouldn't have been able to purchase those services. It was just not geared for what we were at that point. So it's really hard to say, would I have done things differently, because you always use what is available at the time. I mean, if I look at for a completely new entrant to the market at this point, I would probably start with a banking as a service platform, something that brings both the license as well as the technology. But of course, depends a little bit where I want to bring my innovation. If the innovation is very close to the customer, if it is on the customer interface, then outsource the financial services, the banking. But what we'll probably start to see in the next couple of years, or to a degree are already seeing, that some of the neobanks that started with a BaaS platform are now starting to either acquire their own licenses and use that with a maybe the same technology provider they have, or then with having an own license, they have the flexibility to then bring additional vendors, select those solutions that work best for them. So starting with a BaaS provider is a great way, but then at some scale, you probably want the flexibility, you want the margins, and you want to be more in control of your destiny.
Yeah, absolutely. I can fully agree with that. I think that has also been at a time where the customer experience at more traditional banks has not been that great. So many, also like in the SME banking space, providers just launch by using, let's say, a Solaris Bank type of offering that bring them the license, but also a very standardized product set. So all you can focus on is the customer experience, which was at that time better. Now the traditional banks have actually quite, let's say, good baseline of digital services also in place. The question is, how can you differentiate or just on the customer experience level? So then I think it's more important to go also into product innovation, and there you need more flexibility, which then gives you or brings you to the whole segment of core banking providers, which basically allow you to create almost whatever you want in terms of product configurations and the tech setup. Also in terms of geographical expansion, I think it's also an important topic, which is quite limited when you go with a fully licensed BaaS provider versus if you have your own license, you can be more flexible around that. So Andres, how do you see that choice now opening up?
I think one very, very important matter is the client lifecycle, as Tuomas also pointed out, that you probably start with a certain solution and evolve into different as you grow. But I think there are a lot of threats built into that decision as well. As a founder or as a CEO of the company, you need to really consider what are the pros and cons for each individual solution. And if you go for a fully BaaS solution where you're using someone else's license, it does pose some threats as well. First of all, you are very tied to the one provider with technology and license in the same time. So the investments while you're growing are significantly bigger to migrate yourself away from that vendor, because you need to invest your infrastructure, whether this is a vendor-based or own built, it doesn't really matter. You need to invest into your licensing, and thirdly, you need to invest into migration of your customers as well. You need to think all those matters through if you make that decision. In our banking services portfolio, we have different stages of the customer lifecycle. We see different selections, what they're doing and how they're selecting the vendors. There are a lot of customers who really using the agency services from other financial solutions, financial service providers where they don't have license, but they're also mostly licensed by themselves. And I also think that if you're going to the banking services or financial services market, having understanding and focus to your licensing and governance and regulatory aspects is very, very important. If you at the beginning put it somewhere in the back and don't consider it as a high priority, you also create a different organizational culture, and that might be quite complicated to change later on. Yes, first of all, you're a technology company, but you also play a very on a very regulated landscape, and that's why I think it's very, very important to understand where you are. But there are different options available, and again, it depends what kind of business or service offering you have, whether this is a more monoliner, whether it's a full stack or full service banking services, and how do you see your growth. And Adrian, you pointed really well the geographical aspect. Banking regulation is very geographic specific. In Europe, you can passport to license, well, but you cannot passport the European license to US or Asia. So those are the considerations which every company needs to have as well.
Yeah, absolutely. So Andres, could you also quickly describe a bit what elements you have considered when you did the RFP and choosing a new core provider, and what have been like the core elements that you're looking for at this that you had been looking for when you were choosing one?
Yeah, very good question. So we had a very specific approach, and it's a combination of functionality, what's available, trustworthiness of the partner, future growth and expansion in terms of service, as well, integration with our existing services and other preferred partners, and obviously the commercials, which you always need to see, because we are in a banking services business in transactional banking, which is very sensitive of the price points as well. So we cannot really forget the pricing aspect. For us, of course, the regulatory aspect wasn't that important, although we need to always understand that the banking regulators always look very carefully your outsourcing partners and also the vendors who providing you the core banking solutions or whatsoever. And I think it's very important to follow how the regulators changing their attitude towards the different outsourcing matters. And I think especially now it's critical to look how is evolving UK discussion around public cloud usage. And recently, BRA, the UK financial regulator, has highlighted some concerns about the resilience. So those are impacting very significantly this market.
Okay, super interesting. And Tuomas, from your side, you mentioned also that you have been in the process of launching a credit card for your customers. What have been some of the considerations that you took when looking for the right partners to launch such a new feature?
So for us, when we started on the road to rolling out a initial credit product, we really wanted to start it small. It is a new area for us. So we have a lot of people in the company with background in credit, but as a company, it was a new opening. So we actually took an approach that first do things that don't scale. So we really built the initial offering in-house with our core solution being really Excel. So building it kind of from small beginnings, making sure that we understand everything that goes into the process so that we are sufficiently educated ourselves as well when we start to look at vendors, when we start to make the decision of build or buy. And that's something that I would really recommend for kind of new entrants to anything related to financial services, that you try to do something small before you commit to a solution, so that you are a educated buyer, which is of course in many ways difficult for a completely new entrant, especially if you don't have your licenses. That is a big push to become licensed, and only then you can start to do certain things. So again, there as well, PaaS providers that provide both the license as well as technology, very helpful. But of course, you do then take the vendor lock-in, and you're maybe taking that lock-in very early in your company's life, where you are not in the best position to know what exactly you want for the long term.
Yeah, no, fully agree. And Rivo, now from your side as well, Andres has mentioned functionality, trust, future growth, expansion potential. Tuomas started small, first built a small solution in-house to be better informed and educated around what vendor to choose. I know that, yeah, what are the challenges that you're seeing at clients? And then we can also maybe go into how Tuum is approaching these challenges. I have some points in my head, but I would like to first hear from your in general terms, like how you see what's happening.
I think these are all very relevant points that both Andres and Tuomas highlighted, and maybe to let's say bring or highlight few additional thoughts that we are seeing basically across the globe when interacting with the institutions with various sizes, like really from the new entrants to already large regulated banking groups.
Yeah.
So that one thing definitely that nobody can underestimate is the time to market, and what are basically all the, let's say, cost factors associated to launch such kind of value props. So that we at Tuum, we have a lot of belief into the configuration-based launches. So which means that when already we at, let's say, who are behind the platform, we know what kind of capabilities, instruments the customers already require, and then we make those capabilities available as configuration, which is significantly reducing the risk and the time and the effort required to launch those value propositions. And also it is a good thing for the customer, because then they are much more self-sufficient and they can own this product management and do things in like very agile and nimble manner. So that is something that let's say is one of our core belief, that configuration based and also avoid the kind of custom one-off development as part of the offering. The second aspect is also the functional coverage. Andres and Tuomas both highlighted this one. And we, as let's say the core banking infrastructure provider, we have taken really the overwhelming core infrastructure approach. But also it means that knowing what we do and what we don't do. So that namely we do this heavy lifting side of the core banking infrastructure. But then at the same time, this is not everything. You still have the AML services, verification services, and so forth. And over there, we have a twofold approach which we offer to the customers. Namely, we either offer a la carte menu of like 3 to 5 more common used vendors in those areas, or as alternative, if customer already has their, let's say, favorite, for example, verification service provider, let it be Estonian Verif, let it be like Confide or whatsoever, like we leave the integration endpoints open so that we do not force customer you to use anything out from the a la carte menu, but at least there is an option to have end-to-end service available. Then the second key aspect when considering, let's say, different technological choices and implementation paths, then there is something we love a lot. And this is what we call a gradual approach. So that if you look already, maybe even, let's say, 3 to 5 years ago, then many still decided that it's either everything or nothing. So that now also, as Tuomas highlighted, that you have your core offering, you want to expand into new areas, you at least, let's say, even for some time being, run the business in Excel. If it's scale and you decide to go forward, then you can move forward with that piece. And it doesn't need even, let's say, to change the, let's say, rest of the core interactions. But the gradual approach also is one path for the large regulated entities, how to modernize the offering. For example, you start with the consumer finance offering, you establish the critical endpoints to the treasury, risk systems, scoring systems, payment gateways, and so forth. Once you have this success in place, then the success is built on top of the success, like enhancing your offering later to the SME financing, mortgage lending, and whatsoever. This is already so much more easier. And also the belief that change is possible, it's getting there. Then Andres also highlighted the efficiency factor. So that I think, and this entails also the cost. So that we have a lot of belief into the simplicity and transparency. So that the customer always understands that there are no hidden fees, and basically the cost structure is something that you can predict and rely on. That we have seen various vendors also in our former lives when advising and consulting different institutions, and there are plenty of different schemas. So that's why we decided to go in favor of simple and transparent option out there. And definitely also the choice that, let's say, how you run and operate your platform. And this also concerns the resilience and business continuity, and how does the regulator see those aspects. So that we at Tuum, we have decided that, of course, we follow all very closely what the regulators say and where the industry is moving and applying all the best practices. But also from the technical perspective, we do a bit of extra work and we keep the platform infrastructure agnostic, although born in the cloud. So which means that as a sole vendor, we are able to demonstrate that how does the exit strategy actually work. So that those are the kind of key characteristics maybe that we see out there, reoccurring basically on global basis.
Absolutely. I think one very interesting quote that we also have in the paper is that one of your customers told you that it basically took them 6 months and 100,000 euros to change the interest rate of an existing credit product. That brings us to the first point that you mentioned, which is around customization versus configuration. So I guess that's gradually also a very important point. Maybe also from Tuomas would be interesting to hear from your side. How do you avoid these kind of lock-in effects, and how do you ensure that you're that you don't run into these problems that older institutions have, and just running on quite let's say older infrastructure with a lot of tech debt that then brings a huge cost base with it, and especially if you want to change something, how do you approach this topic?
Well, I mean, it comes a little bit to also what Anders mentioned, that outsourcing in the financial industry, it is an area under increasing scrutiny. It's always been important, but even more important these days. So as a financial institution, you can always outsource a process, or you can outsource a part of your technology stack, but you still and you cannot outsource the knowledge, the understanding. You still need to understand what the product is that you're offering to your customers, what the process is behind the offering. So you really need to have that knowledge, those skills in-house, and also hold whatever vendor you have accountable. And if you have that knowledge and understanding in-house, then it is very important that you have also the agility with your vendor, that you have rapid configuration, that you can change your offering, that it remains your offering, instead of lengthy customization cycles where, yes, you want to do some change, but it takes 6 months and a lot of cost to get that done. Then you've taken the type of vendor lock-in that you really don't want.
Okay, fully understand. Anders, anything you want to add to Rivo's or Tuomas' points?
I think they're all very, very relevant points, and outsourcing and vendor selection in terms of agreed configuration options, agreed how we do certain changes. Change management is critical here, and that's why I think you always need to consider the regulatory aspects. But I think your example is very good about making a change which may take a lot of time. It's a classic example how the old banking core systems are not capable of keeping track of the innovation. And I think if you look at the large banks, most of the core banking solutions would never considered, for example, BSD2 account services information options. So they're just simply not built for that. And that's why you have a lot of costs related to upgrading those systems and making those systems suitable for the modern banking services.
Well, what do you think? How will the landscape evolve then? Is there, I guess there's, as we mentioned, space for the fully licensed banking as a service providers that help, let's say, really early stage fintechs, or also others that are not coming from the financial services industry to launch quite fast because they already bring the license and the regulatory expertise with them. Then we have broad suite of providers like Tuum, which are like really modern core banking providers. And then you have, of course, there's still the like segment of traditional, providers that have a super extensive product catalog and are still trying to also obviously modernize their own systems and bring that to the cloud and so on, and make them more configurable. What do you think? How will this segment split up in the future, longer term?
Some of the providers are more closer to the competitors of LHV. So of course we would recommend every fintech to consider their future path, whether this is a fully serviced path, where they are pretty locked in to one single provider, or actually have their own license, invest into the license, and use a la carte, like Rivo said, that you need to understand what's important for you in certain time frame. You will evolve definitely to certain other geographies or service areas. So build in the flexibility right away. And as Toivo also mentioned, that Tuomas, sorry, mentioned that you start with MVP, which can be excellent, but you evolve if the business complexity is growing to actually proper applications and services. Yeah,
sounds great. I think that is also one of our main messages that we have put in the paper, which is that like the leading and winning institutions of tomorrow are basically leveraging technology, not only for the technology's sake, like that you're not moving for the cloud for pure cost savings, for example, or using APIs just because it's regulated, mandated by regulations, but really rethinking that, how to use technologies and also the new breed of providers that are born in the cloud, as Rivo has said, and use that really as a competitive advantage, because it's probably very clear that in the future at least one part of it will be that financial institutions will compete on their technology stack, and it is already the case today. So rather than seeing technology as a pure cost center, it's really about holistic transformation, which takes into account your business model as well and the customer experience, which are then enabled by technology and not just defined by it as it was in the past. So yeah, I think that will be very, very interesting to see what kind of new business models are emerging. We see a lot of fintechs also in Europe now creating new, very innovative new approaches to finance and that are built on new technology stack. So that will be very interesting to follow. And I think, yeah, for all of your considerations and all of your anecdotes and opinions that we have heard today are really, really important to consider. And I think very interesting for audience as well. So yeah, from my side, I would then, of course, thank you again for participating in this episode. If anyone is interested in the audience, they can check out our white paper where we go actually much deeper into all of these topics.